So now let's look at how to record double entries for assets and liabilities. So I'll have three accounts made over here. I firstly have my bank account, then I have my property account, which is an asset, and over here I have my liabilities account, which is Sarah loan account. So let's look at two transactions to understand how do we record double entries for assets and liabilities. So firstly, Alex, our business owner, decides that we need to buy new property worth $25,000. So over here, let's look at the two accounts that are being affected. First of all, he plans to buy property worth $25,000. So there'll be some place from which the money will have to be funded. For now, let's take it's the bank account that is giving the $25,000. So these $25,000 will be given by the bank account. So bank account is the giving account. And as we saw, the giving, whenever giving takes place from an account, that is credited. So a bank account will be credited. Now, $25,000 worth of property is being received by the property account. Thus, whenever there's a receiving taking place for an account, it will be debited. So a property account will be debited. So let's look at a transaction and for example. So firstly, we'll start by writing the year 2021. Then on January the 12th, this transaction takes place. Which account is the bank account giving $25,000 worth of property to? To the property account. So I'll write over here property account. How much is the worth? $25,000. So that's what we write under dollars. For now, we'll skip folio because it's almost redundant for our syllabus. Now looking at the debit side of property account. So we'll write the same date, first by the year 2021, then the date on which the transaction took place, January 12th. Now our property account is receiving $25,000. Where is it receiving from? The bank account. So let's write over here under details, bank account, and under dollars we'll write $25,000. Cool. So that's how an assets transaction is recorded. Very simple. The account that is giving is credited, which as over here we can see it's the bank account, and the account that is receiving is debited. So usually assets account is debited whenever new assets are added, and the bank account is credited whenever the new asset is added, because the bank account is giving away the money and the asset account keeps getting debited as new assets are being added. Now let's look at an example of liabilities. So our business needs more cash because we have done several transactions. We have spent a lot of money as the business has just started. So we need a loan. So for that, our business owner Alex approaches Sarah, his friend. So, and Sarah tells okay and gives $35,000 worth of loan to Alex. So who is giving the loan over here? Sarah. So Sarah is the giving party. That's why she will be credited. Her account will be credited. Sarah loan account. At the same time, which account is receiving? The bank account. It's receiving $35,000. So the bank account will be debited. So let's again start by looking at Sarah, which is giving $35,000. So this is again 2021 and the date is January the 25th on which this transaction takes place. In details, we will write bank account as Sarah loan account is giving $35,000 cash to the bank account. So we'll write $35,000. So that was a credit entry for Sarah loan account. Very simple. She is giving the loan, that's why Sarah loan account is being credited. Now let's look at the bank account. The bank account will be, let's start with the date, 2021, January 25th. In details, we'll have Sarah loan, and we'll have $35,000. It's as simple as that. So we debited the bank account as it is receiving and credited Sarah loan account as it is giving. And that was our double entry for assets and liabilities.